So today we're going to talk a bit about business insurance, the things that you need to understand, the things that we as business owners tend to take for granted. And it's always one of those things where you don't realize how important it is until something goes wrong. So hopefully we can learn a couple of things today and put some things in place. And if, heaven forbid, anything goes wrong or some of the things that will eventually go wrong happens, then we will be protected. So in studio or in the store with me today, we have Thuli. Thuli, welcome. Thank you so much for joining us here today. And before we actually get into the meat and nuggets of insurance, tell us a bit about Thuli and a bit about Liability.
Thank you, Lester, for having me. Thank you, everyone. Morning. My name is Thuli. People, they usually call me Thuli. I work for Liberty Life, which is Standard Bank Group, Liberty Standard Bank Group. So I've been in financial industry for 24 years, and I was privileged to be in one organization, one group, which is Standard Bank and Liberty. And over the years, I was working with business clients as a business manager, where I was assisting business clients to grow their businesses and also to grow their businesses and to manage risk. So, and then I thought, you know what, growing the business alone, it's not enough. So it's important also to protect the business. So that is why I'm here. So now I assist business clients as well. It's part of what I do. It's not the only thing that I do. So part of what I do is to assist business clients to manage the risk, to protect their businesses.
So I know Liberty is a massive organization. There are all divisions from legal to short-term to longer-term insurance. But for the purpose of today's episode, we're going to talk a bit about buy-sell agreements. We're going to talk about the terms and things like key man insurance and things that the smaller businesses tend to not know that much about. And even the bigger businesses that do know about them, they still tend to take them for granted. So we're going to talk a bit about why that is so important today. So Thuli, if you can just share what the key difference is between key man insurance and buy-sell agreements are.
Yes, also business clients always, confuse the two, even though their whole aim is to protect, because both serve the same purpose, to protect the business. So what I often do, each and every business client that I meet, I work with, I focus on three things, actually. I focus on income. I focus on debt. I focus on ownership, because these are the three things I believe they can make or break the business.
Yeah.
So to answer your question, I just want to unpack a bit about these three aspects that I always focus on. The business, we know that the income is a lifeblood of the business. The business cannot survive without an income. So that's why we're here as business owners, to earn an income. And now the business is stable, is moving on. The income is going great. And in that business, for sure, there is a person that is making the money, that is bringing the revenue. That crucial person in business, we call that person a key man. So what happens in business if that person all of a sudden is not there due to death, due to disability, or a person is diagnosed with a critical illness, stage 4 cancer, for example? So what will happen to business? For sure, the revenue will stop.
Yeah.
Even though the overheads will continue. There will have to be salaries to be paid. There will have to be rent to be paid. So these are the things that you overlook, the importance of that key person. That person, it can be the owner of the business. It can be a staff member that brings more sales in business. So that crucial person, then you feel like if this person is not here, the business will suffer. So we call that person a keyman. So the keyman insurance from our side is, as a financial advisor, I don't sell insurance. So what I do, I manage the risk. So the keyman insurance, what it does, it is actually it's owned by the company. It's company owned. It's not owned by the individual.
Not the person.
It's not a person. It's company owned. So the company takes out a policy on behalf of that person so that in the event that person is not there, the insurance, the payout will be payable to the company, not to the person. So that's keyman insurance, because the purpose is to protect the business so that the business doesn't lapse, it doesn't collapse because that person is not there. So it plays a huge role, keyman insurance, in that aspect.
So just on the keyman insurance, if I'm a doctor, for example, and I run a medical practice, so I'm the person that has the skill, I have complementary staff, I might have a receptionist, I might have a locum that comes in from time to time, which is a temporary doctor that just relieves me if I'm off for a day or if I'm not feeling too well. What would then happen if the doctor itself is no longer able to work and provide the income? Is that where the keyman insurance would come in? Or does the keyman only focus on the sales guy that is bringing in revenue?
Not really. Remember, I've mentioned that keyman can be the owner of the business because you're the decision maker. The keyman can be the person that is senior in business, that is bringing more revenue. Probably this person has got a special skill that helps the business to grow. So that person is important that the business protects, because in the event that that person is not there due to death, the business will suffer. So, yeah. So like getting a replacement, actually, it's tough. So by that time you have that insurance policy, you are able now to train the new person that will replace that keyman insurance. So it helps with that disruption so that the business continues. Because that money stabilizes the cash flow of the business.
Can it be used as a life insurance policy? If we're looking at the same example, if this doctor passes away and the family has no plans to continue with that business, let's say the doctor had a spouse and the spouse has no intention to continue, the business dies with the doctor. Does that then work like a life policy? Because that money then goes to the company, but if the company is no longer there, the person that is left in that person's will would then get that money. Is that how it would work, similar to a life policy?
That's what usually happens next. When the keyman is no longer there, the business also will collapse. So the keyman helps with the continuation of the business. So that, remember, you mentioned that the doctor now has got the other one that normally relieves him. So that person can take over and continue with the business. So that is why another thing, everything will be in the succession plan as well. So yes, as mentioned, one is that income, which I've mentioned the keyman insurance. And I've mentioned that it's company owned. So the company can decide, because remember, whatever we do, we have to think of SARS as well. The company can deduct the premiums in terms of Section 11W. If the premiums are deducted, the payout will not be tax-free. SARS will come and knock and say, pay back the money. Because there's no freelance when it comes to SARS.
Yes, we know.
That we should know. Because SARS will say, I did help you, with the premiums I contributed. So now it's payback time. So now there's some clients who prefer to use the after-tax money and not deduct the premium so that the payout is tax-free. So, which is good.
with you. I understand.
So yes, as I was explaining, the aspect one, which is the key man, the key man insurance, the aspect two, the debt. We know that when you run a business, you will incur debt. And sometimes, the business, when they start the business, they will go to the bank, for that capital injection to grow, to start the business. So that debt doesn't go away, because if I'm wearing now the cap of the business banker. I am in banking. You come to me honest. You say, I need a loan. So I would say, prove it to me that you are serious about this business. You sign a surety.
Yeah.
You sign that paper to prove it to me that, because if you sign that paper, it means in the event that the business fails to repay, I will personally be liable for the debt. So now, in the event that I die, I don't take that debt with me to the grave. It becomes the responsibility of my estate. It's a debt in my estate because I signed that surety. So it's another thing, because now, as we, grow the business, we will have these loans, or sometimes we will sign a lease agreement for 5 years. After 3 years now, I die. And the landlord will no, you signed a 5 years, lease. I need this money. You owe me this money, because I'm not going to get another tenant. Those debts. So it's nice to have the contingent liability. So what is nice about the contingent liability? Currently, you don't see it. It's not in your balance sheet. It's not a debt that you see it today, but it might happen in the event of the unforeseen. So that is why it's important to make sure that that debt is protected in the form of contingent liability. So that's aspect number 2. Aspect number 3, that I always, I love aspect number 3. It's a buy and sell. Aspect number 3, we are partners. We have a 50-50, say, for example, shareholding.
Yeah.
So as partners, we're running this business. We started this business from scratch, and, we've worked hard. We have a history together. And now something that happens. One of us, I die in the event of my death. So now my estate, my family, my 50% goes to my family. So you find yourself now having a 50% shareholder that doesn't have skills of running the business. So it becomes the problem, because now you have to make decisions with this person that doesn't even have the skill, that doesn't even know the history of this business, how it was established.
Yeah.
So the buy and sell insurance, how it is structured, I take a life policy on your life. You take a life policy on my life.
Okay.
When I take a life policy on your life, I am the premium payer.
Okay.
I am the beneficiary. You're the life assured, vice versa. You take a policy on my life, you're the payer, you're the beneficiary, I'm the life assured. Now I die. As a surviving partner, what you do, the bank, you go to us, Liberty, go to Liberty. Liberty pays you, not my family, pays you the lump sum, because you're the beneficiary and you're the payer. So pays you that lump sum so that you are able to buy that share from our family, to avoid that headache of working with people you don't want to work with. So you pay the estate, that 50%, it goes to the estate, and then you move on with your business. So which is good.
Thuli, I'm going to throw a span in the works here for a second.
Cool.
I have a business partner. I have type 2 diabetes. My business partner is perfectly healthy, right? So we're 50-50 partners in the business. Liberty says that because you deem the higher risk, your premiums are going to be 2,000, for example, and his premium is going to be 1,000, but the payout amount is the same.
Correct.
How does that get structured? do I get punished because my partner is a little more unhealthy than me? Or do we structure it in a way that because of his lifestyle, because of his higher risk in inverted commas, he should then pay that bill, even though I'm the beneficiary of that transaction?
It happens sometimes, and don't go there. Otherwise, you're going to create a mess.
Yes.
And SARS will be there and saying, thank you for creating this mess. Because like now I'm going to have something also. So it's not a punishment because yes, life policies, they are underwritten. The insurance company will have to establish, the risk. So there will be an underwriting. In some cases, one partner will be declined because of health risks. And then one partner will be approved. So what I usually, recommend to business clients in that aspect, they have two options. They have options, actually. I will just mention two.
Okay.
A part of the options, it could be that the partner that is diabetic has got an existing policy. So he may use that policy. He may sell it to the partner, to the co-partner.
Okay.
And then once it's seeded, now that partner becomes the owner and the payer of that policy because it's seeded to him. If that's not an option, another one that I always recommend is rather if the traditional life policy doesn't work, is to take out an investment, a sinking part. This one requires a lot of discipline because now you have to put aside some funds in the sinking fund so that in the event that something happens, at least there is something in place.
I understand. Okay. So it can get a little complicated if it's not structured properly.
Yes, and because now, as mentioned, if now you will say, okay, you know what, you're high risk, continue paying your premium because you're high risk. The minute the life assured pays that premium in the event of death, SARS will regard that as a donation.
Okay.
Correct. Yes, it could be a donation because now that you are donating, that money will be payable now to me. I was the payer. Life assured, it will be payable to my estate.
Okay.
So now, if I need that, I'm paying it to my estate, is paying to you. It's a donation. It will attract donation tax. So that is why the structuring is important. And I always recommend that when you work with the advisor, because from our side at Liberty, behind the scenes, I work with legal advisors. I work with legal consultants. There's quite a lot of people that I work with to make sure that the policy is structured correctly.
Oh, got you. We're going to open up to a couple of people that might be in the audience that might have any questions for Thuli. Yes. But before we get there, I want to share something that I was exposed to a couple of years ago. So one of my clients had a business partner, and this business partner was accused of sexual harassment within the workplace. It was verbal sexual harassment and it was an accusation. So this person was then suspended and they then eventually decided to part ways. Now, this is not a death. This is not anything that merits the activation of a policy payout. But if something like that had to happen to any of the businesses that might be listening here, if they had a partner that has been fired because of negligence or because of whatever reason, is the policy still able to be activated in a situation like this? Or is it only with regard to death and dread disease?
Remember, the policy, every time the policy was established, there wasn't insurable interest. So if, as a partner in business, you decide to continue, you may continue, even though it can probably create problems in the long run. Though, in terms of if something happens to that partner, she dies after 5 years, you are able to go and claim because at the time of establishment, there was an insurable.
So even though he wasn't
interest.
actively in the business for a certain time period, a
Yes.
few years later, he passed.
Because remember, you kept this policy active.
Gotcha.
You continued paying
Okay.
premiums. So now, after years, yes, even though it's said to part ways, because some partners will be like, I've been paying for this, for quite some time. This is an investment. So, or probably they can see that, the life is not so good. It happens.
Gotcha.
Then you feel like, you know what, I've been paying for this for years, so why should I cancel it?
Yeah.
So if a person continues, for sure the insurance company will pay because they will check when was it established.
I'm also sure that you've seen some interesting stories, along your journey being at Liberty, Were there any instances where there was an agreement and now the person is aging, they're slowing down, it looks like they're picking up some ailments, so the other partner might think, okay, there might be a payday coming soon. Do I increase the key man insurance payout on this person to get a bigger payout? Have you seen things like that happen in the industry?
Quite a lot.
Okay.
Because remember, every time the partner is increasing the policy, it will be subject to underwriting.
Okay.
So the risk will be established. It's not as if automatically that policy will be increased. Unless, because at Liberty, we have what you call future protector. Future protector, you take out a policy today, you add a future protector so that in future, because as you grow, we develop some things. So in future, you are able to increase it. So without underwriting, there might not be an underwriting except with HIV.
Okay. Okay. That's interesting.
Yes.
So we're going to open up to the audience that are here today. If there are any questions that you guys might have for Thuli, please feel free to ask, and I'm sure Thuli will do her best to answer adequately.
Thank you so much.
Okay. Looks like we are good. Looks like we are done. Thuli, thank you so much.
No questions.
I think if there's no questions, it means that you've answered all of our concerns adequately.
Okay.
Yeah.
Thank you. I'm
Thuli,
glad.
thank you so much for coming out today here at the Tiger Valley MTN store. We at the Founders Hub, we are here every Thursday morning from 9:30 till about 10:30. So if you are a business owner, you want to get more information, you want to join the community, or you just want to take advantage of the latest specials here at the MTN store, come down to Tiger Valley, ask for Alicia. She will look after you.
Oh, yes.
And we will be back
good.
next week, same time, same place again. Till then, goodbye.
Thank you.
God bless.
Otherwise, here, just in closing, it is very important that, we consider these insurances. So the insurance, it helps, to manage the risk. So we here at Liberty, we rather push the risk to the insurers and have a peace of mind of growing your business. And another thing that I didn't mention that I do assist with corporate benefits. In the event you have your staff members, so you want to give them life policies, retirement annuities, and all that, I do assist with that as well.
Awesome.
Okay. Otherwise, thank you so much. It was great, to be here.
Thank you, Thuli.
Thank you.